Welcome to Alan Berry Reports TV. I'm Alan Berry Labakan, your host from AlanBerryReports.com. About 6 weeks ago, we put out a show that we called the death of the news of about the death of the gold bull was greatly exaggerated, and what was happening at that time. There was some very high-profile stock market technicians that are well known and do a lot of commentating, and they were making some negative comments about gold. And we talked in that show. By the way, if you're interested in watching that show and you're watching this show on our website, just look below me on the video player, and we've put a group of our recent most popular shows on there, and you'll find it with a link to watch it if you'd like. Basically, what we had talked about were the various different reasons that we felt these gentlemen were wrong. A lot of that argument comes down to being careful about technical indicators. Technical indicators just on their own can tend to give you signals that, and technical indicators with emotional indicators can tend to give you some sort of incorrect signals, if you will. And at that time, gold had been under some pressure for a bit. Now, bear in mind that this was after it had hit an all-time high of over $1,900. Then there was some profit taking. It got under some pressure in December. It was under some pressure that brought it all the way down to just checking here around the 1,500 and let's say 70 mark. And whenever that happens, we always try to talk about what's going on with the fundamentals. Gold to us is no different than any other commodity. Supply and demand are what moves it, and if supply, we've talked a lot. In fact, you can find it in that report or show. We've talked a lot about the supply chain for many years now, because that is a major influence on the price of gold. And so when you get these technical indicators, we tend to then look at, well, what are the fundamentals telling us? And at that time, the fundamentals have been telling us what they've been telling us for around a decade, that if there's not enough money, not enough new discoveries, not enough new mines in development, that to feed the supply chain, and that's why the supply chain is very weak. As we're hitting record prices for gold, the production is actually declining over the last 4 or 5 years, and that's not supposed to happen. Economics 101 tells you that when prices move up, then production will move up, and when production moves up, that tends to bring prices down. We haven't seen that happen, and the reason is this issue with the long-term supply trend. Then when you also have strong demand coming, when you have a weakened supply and strong demand, that's why prices go up. That's why they've been going up for a decade, and why we think they'll continue to go higher. And so those were the key reasons that we felt the commentators that were calling, even one of them, who's a very high-profile guy, was Dennis Gartman, was saying that the gold bull was over. And we thought that was way out of whack, and talked about that about probably around the second and third week of December 2011. Talked about why we thought he was wrong. And since then, the gold has bottomed and moved up from that 1570 range. Today it's trading, just checking here. Today it's up quite significantly. It's up $26 today to $1,746 per ounce. And yeah, the bottoming trend has happened, and now it looks like it's in a more solid trend. And so, goes. It's a this type of action is a very good indicator of why you should stay focused on the fundamentals. Now, when you look at things through the perspective first of what's going on with the fundamentals, then the technical indicators, the trends, start to make a lot more sense. And when the trends make a lot more sense, you're more likely to make good decisions as opposed to emotional decisions that are just focused. And a lot of times the emotional decisions come about because of what's happening with the short-term trends. And so if you're able to identify that the trend is not one that's going to continue for a long time, then you're more likely to take advantage of those trends and get some really good bargains. And so, those are some of the things that we've been seeing of late in the last 6 weeks or so. Again, if anything, we talk a lot about how the supply chain had been weakened in the 80s, 90s, into the 2000s because there was an underinvestment in exploration. And we're really seeing the ramifications of all that. The new discoveries, I look at news releases every day, a lot of news releases every day, to try and find companies that we haven't already found to talk about in our reports, past shows and stuff like that, or companies we want to do research on. Now, bear in mind that since 2005, when we started putting our reports out, we've picked about 50 companies. Now, those 50 companies, a lot of them have advanced their projects quite significantly. Some of them have even become mining companies. And so we have a very good roster of companies that we already follow, but where we're having real difficulties is finding new companies to add to that roster. Now, the next thing we're going to talk about is some trends that we're seeing that are ways to take advantage of gold stocks and make extra returns off of gold stocks. But it's no longer where we feel that we can add a whole lot of new companies. The trends that we're seeing now are more how to add to your performance during a strong bullish trend. And we think that gold is in that strong bullish trend. So one of the key ways to take advantage of that is look for the dips in the prices. When you have, stocks don't go, commodities or stocks don't go in one direction all the time. In a bullish trend, you can get pullbacks that will happen during a bullish trend. Those pullbacks or profit-taking periods, whatever you may want to call them, are usually fairly short-lived, and one of the best strategies is to look for those short-term pullbacks as buying opportunities to get things at a bargain prices. And now, conversely, if you see good, strong rallies, those rallies are probably a good time to take some profits to prepare for the next pullback. So sometimes when you're bullish on a sector or a commodity or something, and people, it's almost like it's sacrilegious if you talk negatively about that, and I just think we just think that is ridiculous. It's you don't have. It's not like a sports team where you always have to be rah for your favorite sports team. In the case of stocks and trends, sometimes you want to go against the trend, and when it's like I said, when things are moving up, taking some profits along the way, so you can prepare for the next time it comes down, and it will come down. Trends, bullish trends, have a lot of pullbacks during those bullish trends. Now, what's really important talk about when we talk about those pullbacks is that we're seeing some very bullish signs even during the pullbacks. Said this before on past shows, I'll say it again in the future, that when you're in a trend, the counter trend moves often are going to tell you more about the longevity of that trend than the run-ups. And what I mean by that is if you take a look at when gold pulls back, since that 1570 low, we've had a couple of short-term pullbacks. Now, what happens during the pullbacks are that they're not very deep and they don't last for very long. That is exactly what we've been seeing this year into 2012 as we've seen the gold stocks rally, or gold and gold stocks rally. And so, you know, your opportunities to buy the dips aren't as great as they can be. Now, just because the price of gold may be going up, that doesn't always mean that all the gold stocks are following. So if you get some dips in your favorite gold stock that you really liked and you think that has a strong fundamental story of growth ahead of it, you know, looking for pullbacks in the price of that particular stock is also a very good strategy. And so, you know, we've talked a lot about these trends that we're seeing and ways to take advantage of them. And that's we think that gold is in the health of the gold price is very strong due to supply and demand fundamentals. So we think that a great strategy to take advantage of that is to look for dips in the price of gold or dips in your gold stock that you're trying to buy to take advantage of bargains. And by getting those bargains, you can be in a position to take some profits when the rallies happen. And just like when you're in a bull market and the pullbacks are shallow and short-lived, the opposite is true. When the rallies happen, they move further and they last longer. That's a quintessential sort of stock that goes, or, you know, commodity or stock that moves up like this for a long period of time. That's what we've been seeing in gold for a decade, and nothing has sort of changed our opinion of that for gold. Now, because of all of the volatility in the market since 2008, with when we had that big stock market correction and all the economic calamity, we've seen that during that period that the sentiment towards stocks in general there's a undertone of fear. Now, that doesn't mean that a stock market can't go up during an undertone of fear. There's an old saying in the stock market that the stocks move up on a wall of worry. And so you can't have, if you have unfettered enthusiasm, then you've got some problems. As long as there's a healthy undertone of worry out there, then that's actually a very positive thing. And so, in post-2008, the sentiment towards stocks in general has been, there's been a high level of fear, and so that can cause all stocks to be under pressure. Now, one of our arguments that we've been making a lot lately is that we think that gold stocks high quality gold stocks will outperform the market. We think that gold will help that happen, but also we think that there's a sentiment shift happening. We talked about this a lot in our Outlook 2012 report. Again, if you're interested in watching that show, just look below me on the website, and we've got it on the main page there where we've got a link to go watch that show. We talked a lot about how we felt that 2012 is going to be much more bullish for stocks in general, and that this would also, as gold was moving up, be very bullish for gold stocks. And so far, that's what's happened. Now, at the same time that we were seeing all this happen, with this negative, or with the market commentators that I talked about earlier, talking about how he thought that the gold bull was over. It's also when we started our recent private reports. Now, our private reports, what we do in there is we talk about strategies, and then we also feature companies. And in the first 3 reports that are out, if you're interested in buying those reports, they're very inexpensive and full with a lot of good information. Just look above me on the website at the shop section. In there, we also have a video that talks about the reports and the goals, and you can find lots of good information on there if you're interested in buying those reports. Now, what we've done in those reports is, as I said, we talk about some strategies, trading strategies in the opening of the report, and then so far, each report we've added 2 companies to our private reports roster. And those companies are off to a real good start. The last time we checked on the companies from the first 2, now bear in mind that the third one has only been out for about a week or so, so it's kind of hard to add that to the returns. But so far, the first 2 reports are up on average about 15% since we launched the report in December, around December 20th, I believe, was the first report that we've done. So so far, the goals that we're after with our report we're meeting them. Our picks are outperforming gold. Gold is outperforming the stock market, and the stock market has had a nice rally. We thought all of those things were going to happen. We talked about them in our previous reports. If you want to find out about our previous shows where we talked about them, you can look below me, or if you want to find out about the previous reports, just look above me in that shop section. You can either subscribe for an annual membership to our private reports. We send those out directly whenever they're out. It's the quickest and most best value to purchase the reports. Or if you just want to get our individual reports, you can buy them individually too. Everything's in the shop section. You can look in there. So getting back to the stocks now, so we talked about, we added a group of companies in there because we felt that, as I said, that gold stocks were going to do well, and the timing was very good. Oftentimes when the market is getting beaten on, that's a good time to be bullish if the fundamentals are and we sort of eat our own cooking here, and we were making those market calls that the market was oversold and that the rally was coming and that gold stocks were primed to outperform. We put our money where our mouth is, and we started our private reports to talk about that and pick companies. And so we're never afraid of a challenge during tough markets, especially when we think that the trends and the fundamentals are on our side, and we thought they were. That's why we did that, and that's why we put out that past report. And so things are off to a really good start with our 2012. The picks that we made in our 2012 Outlook report are doing really well. You can find a link to that below me as well. And our private reports are doing quite well as also. So again, check out our shop section for information on that. So on closing, I wanted to sort of wrap all this up and basically talk about one thing is that the gold bull is alive and well. It's alive and kicking, and we think that 2012 is going to be very good for the price of gold. It already has been. We really like the trend that we're seeing where it bottomed in December, has rallied quite significantly since then. During that rally, the pullbacks are very mild and don't last very long, whereas the rallies are stronger, last longer, and that's a very good sort of indicator that the gold bull trend is alive and kicking. Another thing that we talk a lot about is that with high quality gold stocks, it puts you in a position to significantly outperform gold and significantly outperformed the general stock market. And that's what's happened so far for us in our private reports. And we expect to see the rest of the year not only good for the price of gold, but also for high quality gold stocks. So, on that note, we'll wrap the show. We want to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to get the word out about our reports, and so any efforts you make to email your friends that follow the markets or let them know about the work that we do, including our website, our private reports, our shows, is greatly appreciated. We also like to send out some thank you messages when we close shows. We use YouTube.com as our primary platform to produce and broadcast these shows. If you're interested in doing online shows, they are a great platform to do that, and we highly recommend them. Also, if you're watching the show on our website and you look to the left of me, we have a group of banner sponsors on there. Those banner sponsors are really important in us being able to do the work that we do and provide the reports or the shows that we do. And we invite you to check those companies out. If you click on their banners over there, they're directly linked to the company's websites. And on those companies' websites, by the way, the companies that we invite to be banner sponsors are companies that we've followed and have featured in past reports, and we think highly of them, and that's why we allow them to have banners on our websites. And so check them out. You can do a lot of homework, and you'll see what we're talking about, why we have a positive outlook for those companies. And of course, to you, the viewers, if you didn't show up, we wouldn't have a reason to do the show. So thank you very much for tuning in. So on that note, we hope you can join us for future shows. Have a great day, and we'll talk to you soon.